All right, guys. So this video is a quick one to actually show why we took the trades we took in the um in our prop account. So first things first, I'm actually here on the red list. Let me zoom in on this one. So this is Euro GBP, and I really like this one. Why? Why did I take this trade? So we are in the overall context of this trade currently has been an uptrend. As we can see, we've been in strong uptrend, the euro actually being more of a bargain than the pound. So why do I or do we think markets are favoring or will favor the euro against the pound? Now, here's a simple thing. Now, most traders would come here and say, um, actually, there's a long support and resistance level that used to be somewhere around here, which price I think had already just faded right now as we speak, which is this one here. So we moved back into that zone and we went slightly below it. Now, I'm not coming here to start feeding you on technical analysis or all that stuff. Yes, technical analysis is something that market um requires your attention as well. I actually do technical analysis, but technical analysis to me, okay, it's anything that has to do with price patterns, and all that, and support and resistance, supply and demand. I personally like to use supply and demand to trade, which I can equally use all of them, trend lines, just name it. Now, reason why I took this trade or I dropped this trade for our big in our group chat is because number one, this trade, considering our approach, this trade ticks all the boxes, right? Now, with in terms of interest rate, version, let me quickly change this to the pound to get a sense of what I'm trying to say here. Right. So in terms of interest rate differentials, yeah, the UK has higher interest rates than the euro for now. But ask the simple question is, if they have higher interest rates, why has the market been in a strong uptrend? Now, here's the thing. Recently, Europe started cutting interest rates, I think for almost a year now, or more than a year. They cut interest rate now. Last few months, they've been cutting. Europe has been in a cutting cycle, which they signaled they've ended their cycle somewhere around early 2025, thereabout. So here's the thing. With the UK being in a serious conundrum where the UK have what is called stagflation. And stagflation is simply where you have low growth and high inflation. UK has been running a serious high inflation, and their unemployment has been on the rise. Now the economy has been shitty, and with the whole new fiscal policy for taxes and all that, like it's just crazy out there in the UK. So if you happen to be an institution or market or investor, instead of putting your money in the UK, which is in an uncertain environment, why not put your money in Europe, which has actually been doing well and seeing growth? You understand? So now, looking at what we consider to take trades, because as I keep saying this, markets move on expectations. And now, um, let's go to our recent fundamental analysis for the Bank of England. Let's see what we can plug in here. Let me simply, I use AI to actually make my fundamental analysis fast because I'm not one of those people that would say AI is going to replace traders. If you think AI is going to replace you, then AI is going to replace you. But if you know how to use and ask the right questions, I think AI is going to be one of the best tools to make your trading easier and faster. Now, you're a senior voting member of the Bank of England with the analytical rigor of a world-class macro trader. Your entire framework is governed by the Bank of England's mandate. You are an expert at managing market expectations. Your task is to provide a concise 2 to 3 paragraph monetary policy assessment based on the most recent publicly available economic data. See that? That matters for the central banks. Now, it says here, stated position. Briefly summarize the sentiments from the latest statement, and press conference. After declaring the data, deliver your assessment as a single coherent narrative that seamlessly integrates these 3 points. Now, the first point is primary risks, primary mandate risk, and which of their dual mandate is at risk, because we know most major banks run what is called a dual mandate, which is maximum employment at stable prices. Now, we need to ask the AI to assess all the data, look at all the economic data, and come up with these 3 things that, okay, which of the primary mandates is at risk? What is the policy bias and narrative alignment? Logical market reactions based on all this stuff. And now, here's what the AI came up with. It said, looking at our November decisions, now the AI is talking as the member of the Bank of England. We held the bank rate steady at 4% with a tight 5-1 vote, with the minority pushing for a quarter point cut. The sentiment from the statement and my colleagues' remarks in the press conference was cautiously balanced. We acknowledge inflation's downward path, but stress the need to watch sticky services prices and wage pressures closely, all while signaling we are data dependent and not pushing into easing. That was in the last meeting, right? Right now, it's the employment and growth side of our mandate that's flashing the biggest warning light. You see, not inflation. CPI is to 3.6% in October, with core CPI at 3.4% and services at 4.5%, pointing to a near-term return to target as wage growth softens further, right? But unemployment climbed to 5%. Now, unemployment in the UK climbed to 5% from its previous number through September, the highest in nearly 5 years. That's a big one. And Q3 GDP barely ticked up 0.1%, underscoring a jobs market that's cooling faster than we'd like amid the fiscal headwinds. This puts real pressure on output stability, justifying our focus there over the still elevated but manageable inflation risk. Now, the Bank of England is actually saying that they're not worried about inflation, but they're rather worried about employment and the downside to the labor market. Now, the data starting to nudge against our hold narrative, validating the dovish voices, calling for measured easing to support activity without reigniting price pressures. I'm leaning hawkish on pace. Overall, this tilts us dovish for the December meeting. Markets should price in that shift. Expect sterling to soften a touch medium term, right? Expect the sterling to soften a touch medium term, let's say 1 to 2% against the dollar over the next quarter as traders dial up cut expectations to 3 or more by mid 2026. Now, easing part easing the path for household and firms without derailing disinflation. And this is actually cool. So the tone of the Bank of England has pivoted from being actually hawkish to now being dovish because of one of their dual mandates actually being under pressure, which is not inflation, but rather the labor market. So, and also looking at Europe, we've seen Europe actually maintaining we're okay with where we are kind of thing, and there's been growth in Europe. Only thing that Europe is worried about right now is the inflation side of things. Employment is doing well, but the inflation side of things is what they're worried about. They're worried about, okay, let's not ease further in order for us not to spur inflation, and inflation goes out of control. You understand? So now, looking at these two currency pairs, one is worried about inflation not going back up again because inflation is somewhere around their 2% target. So I think 2.2 or 2.3%. Now, the other one is worried about the employment side of things and is looking to cut rates, if not one or two or three times, to help support the employment side of things, right? So now we've been in an uptrend here. The fundamentals has been screaming bullish for this currency pair. And even as we continue to pull back here, the fundamentals kept telling us, look, this is supposed to continue to the upside. Part of least resistance for Euro GBP should be to the upside. Now, it's our job as traders to try and time this market using technical analysis to see if technical analysis is just a good entry or green light go. And that's why I said you need best of both worlds. You can't trade fundamentals without the technicals, right? Because when you mix both of the best of both worlds, then actually get what you're looking for. So here we have another demand zone. Look, I thought we actually come back to this one. But if we do, and the fundamentals still remain bullish, I'll definitely look to add more positions to add close out this one on the small lots and then look to position myself even lower for more risk to reward ratio. So the reason why we took um, Euro GBP was just what I just read out now and what I explained now. Europe is in a good place with their economy. Bank of England is looking to cut rates to help spur and stimulate the economy. Now, this is the fundamental bias, and then we need to find the technical bias. So here we had a daily demand, 4-hour demand zone, which we're actually working nicely, as you can see. Now, I already have a starting position here. My thought process is this. The fundamentals remain bullish for the December rate decision. Now, if we can get a breakout of short-term downward channel or downtrend, if we can get a breakout here, I would look to add another position to my initial starting position here. So if we get a breakout outside of this trend line, I would look to add a position and hold all the way for new highs. Now, let's also look at another currency pair we added to the list. USD/JPY. Ooh, this is actually going well. Now, this is the daily time frame. Initially, when Powell said they weren't going to cut rates by December due to the lack of data from the federal government because of the shutdown, market started screaming higher. Not up until Williams came out and said, yeah, we can still cut rates by December. Not because the Fed is confused, but because when they started getting the data, they knew they had messed up and the labor market was actually softening. They needed to cut, even if it was another 25 basis points, just to support the labor market. Now, this re- now seeing this, um, market had to price out the rate hold and price in rate cuts for December. And we did. That was actually what we did. That's why we saw this, short squeeze, this squeeze lower, or should I say long squeeze lower. And market prices actually moved into a demand zone, which was nice. Now, remember I said the Bank of Japan has been quite bullish. I talked about that in our last meeting. My friend, Bank of Japan has been bullish. Um, Though recently the governor, Kazuo Ueda, started coming out to start talking about initial rate hikes, blah 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 blah. So this was a nice one to buy from. We wanted to see further confirmation. That's why we didn't enter in this hammer candle on Friday. So rather what I did was I went down to the lower time frame, 1 hour. Remember, I said technicals can be anything, can be trend lines. I personally like supply and demand too, because of the profit margin. can be trend lines, it can be whatever, price patterns. But as long as you understand the primary driver of the market, this supply and demand or lines on the chart doesn't drive price. What drives price is the underlying condition, the fundamentals of that market. These two aspects, both technicals and fundamentals, can have their mm, downside or their advantages and disadvantages, but I'd rather do the best of both worlds. So when we broke out of this trend line here, I took a starting position and my stop loss here. Now, my anticipation was if we could get a pullback, which we ended up not getting actually for USD So that was my anticipation. If we could get a pullback, but we didn't. But if we're able to get a pullback into these levels, then I would look to add another position or just let it run. This level would be a nice level to add another position if we get a pullback inside of this level. Oh, looks like we have a very nice demand zone here. Let me quickly highlight. Okay, so yeah, if I get a pullback during the rate cuts tomorrow, I would look to buy USD and then use the retail traders who will jump in to sell this market as exit liquidity. And also, if the forward guidance from the Fed chair is actually hawkish, wow, I love that. That means we're going to see 160 on the USD Now, as we come to this level of 160 to 162, be very careful and cautious about this level. Why? Because the Bank of Japan is talking about potential rate hikes in December, and also they've openly talked about the 160 to 161 level in potential levels where they could intervene, which is market intervention. Most central banks do that, Bank of Swiss and the Bank of Japan, which is something we see here. This was currency intervention plus interest rate hikes. And as you can see, the markets dropped like crazy. So I'll be very careful of this level. And that's why my first take profit is my take profit actually is exactly at 160 or even 159. I might choose to take my 160. I think we might get to 160. Then if the dollar continues to strengthen against the yen, I think the Bank of Japan is going to do something about it. So that's just it for this one. Which other one? This one is Euro USD. We had already exited this trade. Yeah, we took this one. It was a nice trade actually. We took it here and we exited. Rate cuts fully priced in. Maybe a month and tomorrow we're gonna see some spikes and then continued push lower. Now, if we get to this level, I'm very interested in this demand zone here. Very interested to see if we can pull back into that one. And maybe fundamentals might change and then we can grab a buy. Now for GBP USD, I'm looking for shorts. I'm already short on this one. I'm short GBP USD because like what I said earlier, the pound is really in a bad shape right now. And I'm not really looking to long the pound against any currency pair for now. I also have a lower time frame. I have a starting position somewhere around here, slightly higher. Yeah, I have a starting position here, exactly where it is, and I'm looking to add another position. Should we get a break? Yes. I'm looking to add another position at the break of this trend line. We're currently at the trend line and we're looking to break down. Let me go down to the 1 hour time frame. Exactly. So this is a trend line here. I'm looking for a break to add a second position. So no, it's not correct. It's just for lower time frame entries. you know, playing around. But if we break below this upward trend line and close below it, I would look to take another position and have my stop loss somewhere around here, especially, like I said, potential bullish forward guidance after the rate cuts. I would. Now, if the forward guidance doesn't come the way I expect it or it comes out dovish, then fuck yeah, I'm gonna close the trade and take a small loss on that one. And I think we equally have something that looks like a supply zone here. So should in case we break and retest, interested in this level, which might throw some traders off. Now, if we don't break this trend line to retest this during the rate cut, then I wouldn't take this trade. I would I would just have my eye on this, but I wouldn't. But if we break the trend line, then nice. But if we don't break the trend line, I'll have my eye on this 1 hour supply zone here. Let's go to the 4 hour to see if we can find anything. Yeah, on the 4 hour, there's just this gas candlestick here. Let me remove this one. This one, yeah. This is a good one. So if we break this trend line, I'll be very much interested in taking shorts or adding to the short position, which I already have, which is running in profit as well. So I'm expecting a hawkish cut. By saying hawkish cut, which means a hawkish or bullish cut from the Federal Reserve. And let's say they might say they cut and they might signal no cuts for January or stuff like that. So that's what I'm expecting from the Fed. So if that comes out as expected, and I would add to a position once we break the trend line because actually the Bank of England is dovish and I would expect this trend to continue lower. Now, another one I'm looking at is the Aussie dollar. Now, the reason why I don't like the Aussie dollar that much compared to um GBP USD, these guys are holding interest rates. Pound is actually dovish. So for me, this nah. Let's look at them again. Let's do some fundamental analysis to see if because the Australian bank, the RBA, the Reserve Bank of Australia, actually cut interest rates today. So I would want to um look at their forward guidance after the rate cut to see if there's any changes, and if it further validates my UD USD short position. Let me put this there. Let's see. Uh, let's see. Let's wait for the AI to then. I don't know why Grok is actually misfucking me about. Oh, let's look at. Oh wow, Simon just added a short position on the pound dollar. Um, where are you? So this is actually all we go through before taking a trade, and especially I'm doing this video for wisdom, so you understand our process here. It is not just about technical analysis, where you go online and you see traders saying higher highs and higher lows or screaming at the top of their lungs. No, we have an ideal framework that we use to approach markets. And also, when we come down to the technicals now, when I'm done with this fundamental approach, I'm also going to you the technicals to show you some of the things we further use to qualify, more like zone qualifiers our supply and demand zone. And that's why I said I like trading supply and demand, not because it's the best out there, but because of the profit margin. So let's see how this goes. Network is a bit bad, to be honest. It's a little bit bad. All right, so let's go back to, let's see. Um, I don't know why the clock isn't loading up. The network is actually bad. Um, oh, network is bad. So let's see if we can use um clock. Let's see. I'm really having a hard time forming this analysis due to bad network. But like I said, this is all part of our process. Fundamentals before technicals. And even when it comes to the technicals, we still have technical qualifiers, which is things you would come across. So now, again, this is for you actually, wisdom. So, and also for you, Simon, we don't, that's why I like discussing trades with you guys. And me and Simon, we've been doing this for some time now. We've passed challenges and we're equally still doing some for now. So, and that's why I love discussing trades. We don't just pick random pairs and jump into them. There are processes you need to follow. There are certain things you need to do. There are checklists here. Now, the checklist for us is simple. First checklist is fundamentals, right? Second checklist is technicals. And the third checklist is qualifiers and your entries. That's all. Technicals come with the zone qualifiers and everything and the fundamental indicators, right? So, um, I don't know why this isn't loading up. The network is very bad. I'm trying to see if I can load up um an analysis for. So it looks like we're back. It looks like we're back. Network just came back now. I just hope it doesn't disappear on me again. Um, let's run a quick fundamental analysis on AUD because it's actually looking quite bullish and close to a supply area. Uh, let's run a quick analysis on them to see what's up or what's going on. It's gone crazy. Let's look at what this beautiful market has got to offer us. Okay, and let's paste it in here. Let's drop it and see what we get. Now let's run an. I'm actually finding it difficult to load this thing up. All right. Let's see. Let's paste it here. Drop it here. It's saying sign up for Grok. Current plan is free. All right, so here it says the as a voting member of the RBA board, um no, not really what I'm looking for. For some reason, oh, I can't access my Grok. So I think I'm gonna do that later on my phone. Anyways, let's go back to the video. Actually taking longer than I expected. So the RBA cut rates today. Sorry, they left their interest rate unchanged, and it's still more like a hawkish guidance moving forward. So then, BPUSD. So oh, this is the framework. We already established a bearish coughing gland, the potential bearish pound, right? Now, next thing is to come for the next step is our technical analysis. Now, here is where some of our tools comes in. Now, this is actually a tool we use to value currencies against one another. Now, for a beginner, you're gonna get your you're gonna learn how to use this once you're done with the course. Okay, but for now, let's see. So, all right. So, pound was actually overvalued against dollar while we were within this supply area here. And let's also look at seasonality. Seasonality, 15 years seasonality. Seasonality is actually giving us an like telling us, yeah, it's likely to drop a bit from now to then bottom out in 24th of December. So we still have a trade. I mean, and it's almost like 14 days to go. 14 of 18 daily candles would be nice, especially when they're explosive. So seasonality is telling us that, hey, there's potential downside, and the fundamentals is pointing towards a downside, and the technical is actually pointing towards a downside for supply within the supply zone, and then value is also pointing towards a downside. And also, when you look at the COT data, the institutions have really started to reduce a lot of long exposure in the pound before we got the government shutdown. So yeah, and I think as we begin to get the fresh data, they said we're going to be 1 week. The COT is going to go back to normal by January, but I still doubt, and I believe, looking at this, I still believe maybe most of them are short this pair. All right. So yeah, we have a trade on GBP short. Now it takes out this supply and it comes back up into this one. I won't hesitate to the position. Even if it comes back up here, I definitely, especially when the fundamentals are still in play, unless if it breaks out here and the fundamentals have changed, maybe something has changed in the story or the narrative, then I would look to reposition myself either for buys or just sit on the sidelines. And same goes to the Aussie dollar as well. I would also look at this to see if there's small potential downside for this one after their rate decisions today, early this morning for Australia. And if there's not, then we stay away from this market. USD Oh wow, actually playing out nice. Euro GBP still actually within this range. I, I just hope we see a breakout. If we do, that would be nice. That would be nice. So this is actually how we approach the market at BPT. First things first, we look at the fundamentals, just like this lovely trade we took on Euro USD. Based on forward guidance alone, markets repriced when the euro was dropping. Powell said when the euro dropped and started repricing, we moved back into a supply zone. Now, we didn't know if this zone was going to hold or not because there was an FOMC meeting here. And when Jerome Powell came out, he said the Fed is not likely going to cut rates by December, and the December cut is off the table. Market repriced and Euro USD continued selling until Fed Williams came out and said December cut is still on the table. That was when they started getting fresh data after the government lockdown. And market repriced again. And now I think we're here on the day of the rate cut. So Euro actually is more bullish than the pound. So I'm not really looking to short the euro against the dollar. If it comes up all the way up to this level, I might look to take a small shot, but is this what I'm looking to know? But if there's a hawkish forward guidance in the dollar, then this still doesn't look good to me. I prefer to go with the pound dollar. Pound dollar looks way better than euro pound. So I have a trade on pound dollar, euro pound, USD JPY, and uh, a trade on the Nasdaq. But we've not even looked at gold. Let's see how gold has been doing recently. It's been in this tight range here, in this high and this low. Overall, the trend is your friend, but it's been going sideways, which I spoke to a friend, I spoke to a friend of mine about this sideways trend. I'm like, I'm not in a rush to buy gold. We still have potential seasonality that's actually signaling we're gonna come out somewhere around here in December. So December, January seasonality, if I get my technicals aligned for gold, then I'll be looking to add long positions. Even also for silver, silver has just been grinding high. I mean, just look at this. So I think with what we're seeing on silver and copper, whole grind higher, and gold is still within this range. When gold gets undervalued or actually gives us nice reading, right? To go long, we're gonna make more out of this move because it's going to look to a catch up with its younger cousin or younger brother silver. So yeah, that's just it. Still have a running position on this one, Nasdaq, which I'm not really looking to add any positions again. I'll just hold patient and see if we can put a new all-time high. Um, Same thing for US 30. I'd already closed out this one. I closed out this one here, closed out here. So I'm only running a position on this one. I think that's it for now. So when we look at Forex minus, Swiss franc will be holding interest rates, but their tone is actually quite dovish. NZD card, not really it I'm willing to trade. NZD CHF, if I get pullbacks, I look to buy. Euro CHF on pullbacks, I would look to buy. CHF as well on pullbacks, I look to buy. And AUD CHF for now, no. So I think that should be all by now. Euro NZD, yeah. You see, fundamentals. We had a nice demand zone here. We looked to go long this pair and we were getting undervalued readings, but still the fundamentals were telling us a different story. And yeah, this has been a very strong up. I think at some point it's going to go from an uptrend to now a sideways market because both central banks are actually hawkish right now. Same thing for the Euro card. Yeah. If you look at GBP NZD, it's going to be a different story. I told you. I don't think this trend line most definitely is going to break, and we might see ZDCHF now we've broken this previous high, which we haven't seen in a very long time. So I'm gonna start taking off any levels of resistance and supply, and I'm only gonna start looking for demand zones to trade off of, because this currency pair looks like it's actually changed trend due to the recent forward guidance from the Bank of New Zealand. So instead of I'm now going to go from looking for supply to looking for demand zones to buy from. So if I get a pull back into this zone, that would be nice. Is there any other demand zone here? So could be nice one. But this was a candle. Yeah. So any pullback really and uh zone qualifiers give me a signal. I would look at this one as well. So yeah, that's it for the day. I need to get some rest and start planning how I'm going to spend the rest of my evening as a single guy. All right, so thanks guys. I hope this video provide you with some guidance on how to not make unwanted and impulsive decisions. This is a trade I took on Bitcoin, which is still actually going nice as well. Um, at some point, as we progress, I'm gonna start also introducing how to time Bitcoin into our short trade house approach. So yeah, that's it for now. Let's see how this one's play out. And